All right, if we have been reminded of anything during the pandemic, it's that pets are a great life companion. And because of that relationship, us humans are willing to lavish our fur babies with many, many gifts. Consider this, folks. In 2020, the national pet industry topped $100 billion in sales for the first time ever. But will the pampering of Fido persist as we head back to offices and leave Fido all alone at home? Let's check in with Mickey Chadha. He is Vice President and Senior Credit Officer at Moody's. Good to see you this morning, Mickey. Happy Take Your Dog to Work Day. Listen, I mean, we've seen a real pandemic-driven boom in the pet industry. Do you think it can continue?
Well, if you look at the performance of the pet retailers, I think that there's the performance still has some legs to them, and the reason being that in the pandemic, a lot of folks were at home and working from home with stay-at-home mandates, et cetera. The pet retailers were open. A lot of folks got pets, and so the pet ownership has skyrocketed. And as you know, pets are part of the family, and so once you have a pet, it's highly likely you're going to keep the pet. So that is a recurring revenue stream for pet retailers. Once you have a pet, you need pet toys, you need pet food, and all the accessories that go with pets. And with the humanization of pets, that has really helped out the pet retailers. So, yes, I think there's legs to the momentum here on pet retailers. Absolutely.
And by the way, the photos that viewers are looking at right now are actually pets of Yahoo Finance staff members. So obviously we are a pet heavy crew here ourselves. Look at that here, Harold there showing star quality in the middle. Mickey, as we know as well, there has been a pet adoption boom over the past year, if you look at the numbers. So we've seen a lot of growth related to that. What do you think sort of the long-term run rate and growth rate we should be expecting for this industry?
So that's a great question. Now, if you look at historically, the industry itself has always been very resilient to economic downturns. Even in the 2009, 2010, the financial crisis, during the recession, when the rest of retail was actually having a very hard time, pet retailers were doing fine. And that's primarily because of the trend of humanization, premiumization of a product for your pets, and the fact that pets are obviously, as you know, become family members. And so if you look at the 2015 to 2019 growth rate, e-commerce has grown about 40% a year. Whereas if you're longer term, total industry has grown probably 4 to 5%. Now, when you look at it going forward, we think that e-commerce can grow about 10% a year, and the brick and mortar retailers about 2% a year. So that gives a pretty good growth rate. Obviously, the channels are changing. A lot of consumers are getting more comfortable with the e-commerce part of the business. Chewy, as you know, was a new name 5 years ago, and today it has over $7 billion of sales and a market cap of over $30 billion. So e-commerce is the trend, and a lot of folks are buying their pet food and pet products online. But the brick and mortar companies as well, Petco, PetSmart, et cetera, are doing fairly well because they have upped their e-commerce capability as well. So there is growth, and because it's a resilient industry, it has done well through downturns.
Mickey, look, I think we could pull up a photo of me with the Target mascot dog. There I am on the left with the Target mascot. Yeah, bullseye. Yeah, I met a real star, and you see Julie with her own star, Sparky, over there as well. As a company like Target, do you think they will play in the pet boom, or perhaps do you think the boom is so good and lasting that a Target could go out there and buy a Chewy?
Well, I think that buying Chewy is a tall order for Target. I think Target has other priorities that it's taking care of. Chewy valuation, like I said, is extremely rich. We're talking over 30 billion market cap. So any transaction there would be a huge deal for Target. So obviously, can't comment on that. But I think if you look at the overall industry, the mass channel, which includes the Targets, Walmarts, and supermarkets, by the way, are still around 50% of the overall industry. So you have the specialized retailers like Petco, PetSmart, and the online retailers like Chewy. But if you look at the industry, the biggest share still is with the mass market. So, a lot of the mass market retailers like Walmart and even Amazon is getting into the pet industry because it's actually a pretty good revenue generator. And I think Amazon currently has about 6 to 7% of the market. But it's a good business, and so Walmart is getting into it in a bigger way, and Target itself, yes, I think pet products are attractive for a company like Target, but I think that a big acquisition in the pet industry would be quite prohibitive, especially if you're talking about Chewy.
So, Mickey, you've talked about how robust this industry is and how so many players are benefiting from it. We have this banner up that says retail winners and losers. I haven't really heard you talk about any losers, though. Are there any companies that sort of are not as well positioned or you don't think are going to get that market share in this business?
Well, if you look at about 3 years ago, Petco and PetSmart were the two big specialty retailers. And because of e-commerce penetration, it was always thought that e-commerce is not really very, transferable to the pet industry because people actually like to go to the store and talk to associates, et cetera. But e-commerce really grew, and PetSmart and Petco were caught a little flat-footed. And then obviously they upped their game and the pandemic happened, which actually was a boon for those retailers. From a loser's perspective, if you have a smaller neighborhood retailers and smaller chains that don't have the scale or don't have the wherewithal or the financial capacity to increase their e-commerce penetration, or they don't have the actual market where they can sell a lot of their products in terms of a mass, more bigger consumer base, those are the ones that are probably going to be challenged because you have a lot of big players that are playing in this game, and they always have an advantage because they do have a bigger cash reserve and a lot more profitability that they can put towards growth. Whether it's e-commerce or brick and mortar. So, and I do know that, I have friends who love going to the neighborhood pet store and, but a lot of these neighborhood pet stores are closing and then they're always, finding it difficult to get the same food brand that they had at this neighborhood pet store. And they're always saying, why are these stores closing? It's just a game of, what capacity you have, what scale you have, what purchasing power you have in order to compete. And that's just happening across the country.
Well said. We'll leave it there. Mickey Chadha, Vice President and Senior Credit Officer at Moody's. Have a great weekend.